Ladies and gents, it's your boy Data. I hope you guys are having a great day. We're going to be giving some important remarks on some of the key things that are happening within the market today. And remember, if you clicked on this video, then you are already more invested and more educated on what's happening in the market than the majority of people out there in the world right now. So congratulations to you for just getting involved and starting to learn some key pieces of the elements within the market and getting more focused on that. We have seen a little bit of a pullback across the market and these top indexes, such as the Nasdaq, such as the S&P 500, and this is likely due to Apple that we've seen having a correction due to two analysts that have actually changed their predicted outlooks on this stock. Now, Apple being one of the biggest stocks and the top stock out there, these indexes do have a high weight on Apple's valuation. We're also going to be getting more into the nitty-gritty, what we've been focusing on the channel, looking at some of those AI speculative stocks that come with more of a high risk, high reward, and looking into these different types of businesses. Now, if you're new to the channel or a returning viewer, hit that like button, subscribe for daily videos, and of course, I'm not a financial advisor. I'm just collecting the data and dispatching it to you. Now, what we do have, first of all, going off in the market coming here on Friday, our stock futures are inching higher ahead of the jobs report, with Wall Street talking about here this actual 9-week winning streak. Now, what CNBC is referencing here is we've had that November and that Santa Claus rally, and with the new year in the first week of January, I think reality has hit us, as we've seen the Nasdaq Composite coming down for the biggest loss for the week at about 3.3%. Now, like we said, one of the biggest factors in the market is the cooling off of some of these large tech stocks like Apple. If you look right here, Apple recently hit about this $200 resistance and now has recently came down to about 180. The last time we saw this trading price zone was last November. And talking about that, what has happened is we've actually seen two research outlooks that have downgraded Apple stock. And talking about new dollars going into this group, people are taking a little bit of a break here with the amount of valuation that we saw in the market in just the previous few months. Now, a big driver that we are seeing for the market today could be the December jobs report, which is due before the bell. Now, economists, they pull that the Dow Jones project the job growth slowed to 170,000 last month. In addition to the market right here, remember that we had the Federal Reserve that has been increasing rates for a long time. During their last decision, they decided to actually hold rates steady, and they even came out in talking about that in 2024 that they are likely done raising interest rates and expected to begin reducing borrowing costs by the end of 2024. Now, talking about this, and people really got in and I think ahead of themselves, is that there is no start signal yet. This is really important right here, because what we do not have is a specific date. There is still unusually and elevated uncertainty about the economic outlook, and with further rate increases still possible. It's important to know that even though that we've seen the Fed come on and say that these interest rates could likely be cut in 2024, it's not completely off the table that they could rise. It's all going to be depending on what's going to be happening with monetary policy, and also with that inflation, with the CPI data. The Fed has a goal to get inflation back to its target zone that it has been in the past, at around that 2 to 3%. And if the Fed can't get inflation down, then we will continue to see those rates increase, since that is probably their number one goal. However, we'll hope this doesn't happen, but take that with consideration, specifically looking at more speculative stocks. And that's what we get into right here, talking about some of the AI stocks. Palantir Technology actually outbeating the market today. We see in the global markets, the S&P 500 in the last trading session closed in the red. Also, in addition with the Nasdaq, what we have for Palantir Technologies is actually up about 1%, finding actually a little bit of a support zone here in the 16s. Now, remember, after Palantir, this is back last year, last November, when those Q3 earnings were reported, we saw Palantir establish a large gap from the 14s to the 17s, and having this exponential rally up to this 21 area, setting this recent 52-week year-to-date high for 2023. Now, with Palantir coming down here, Palantir likes to trade, and what we've seen in historical trading zones is consolidations between the 13s and the 16s with support at that 15. Palantir has experienced a little bit of a cool off after losing support at that 17s, and what we see here is consolidation starting to build at the 16s. Will this continue, or could we see Palantir come down to this $15 level of support? That is entirely possible, but if you are looking at Palantir for the long-term bullish perspective, then this could be a great entry point for anybody that is looking to get involved into the AI industry. And that is because Palantir has continued to grow its company, and we've seen it release great earnings reports within the last few quarters. Specifically, last quarter, we saw an explosion with Palantir's valuation, and also an important thing that we are seeing is commercial business is growing healthy at a healthy clip, and what we have seen is a growth in commercial revenue and commercial customer count year over year. Why this is important is because typically Palantir has relied on governmental contracts in the past for the majority of its revenue generator. With this, Palantir is starting to expand into that private clientele business and is working to get more involved to bring its AI data analytics solutions to the private sector. And talking about that, and with some of the Motley Fool article that comes out here with the top no-brainer stocks to buy right now, Palantir is on that list. Also looking at Micron Technology right here, talking about its high range of performance that we've seen in its memory chips and also with its RAM, and also talking about that leading into another semiconductor stock. This is the Taiwan Semiconductor Manufacturing. So what we're seeing is software on the software side like Palantir, and also getting into the hardware side like Taiwan Semiconductor Manufacturing right here. The hardware and the software bet on the future for AI is a good, steady, I think lots of speculation still behind it, but rather than trying to pick a individual specific business that is focused on one subsector of AI, looking at some of these more general categories, who are the companies selling the shovels, not the ones just looking for the gold. That is basically looking at these chip hardware creators that are creating these AI chips, such as NVIDIA, and also the top leaders in software development, such as Palantir. It's important to keep some of these things on the table, looking into the market and talking about that. Things like Palantir still remain a strong buy on the Zacks ranking, even though that there is a high valuation behind this stock right now. It's something to consider. However, make sure you stay very speculative out there. Make sure you have a hard hat on, because what we could see is going to continue correction across the market if the Fed, for any reason, decides that there needs to be an interest rate hike. Hopefully, like I said, that doesn't happen, but we have seen this cool off. A possible cool off and a continued correction could happen, but these could be some more attractive prices for the future. I'll catch you guys later. Peace out and take care.